Hi, I am Anna. I come from www.ntvforex.com. Asia update: traders hit pause ahead of crucial ECB meeting analysis. http ntvforex.com news ID 856726 9/10/2023 14:26 am. In a classic case of weak hands selling out to strong hands, and after retail got taken to the cleaners scheming off an enormous level of froth, U.S. equities recovered Wednesday as the NBSP/S&P rose 2.0% with a bounce in tech stocks helping the Nasdaq to fare better, up 2.7%. NBSP but, since investors haven't yet mustered up the courage to fill the Tuesday Nasdaq gap, it suggests the tech sector aftershocks are still reverberating and keeping the wall of money sidelined in one of the most interconnected market momentum shifts in some time. There was some good news on the U.S. labor market front. NBSP as U.S. jolts for July were again ahead of expectations, with 2.5 unemployed persons per job opening. Theta well below the recent 4.6 peaks in April, although still 3 times the pre-virus level. So, while there is a lot of remaining slack, job openings appear to be holding in well. And, encouragingly, there was a steady climb higher in U.S. equity markets on Wednesday as volumes normalize, and tech found ETA's footing again as investors are easing back into the saddle with the VIX settling in below 30 again. Tech continues to set the tone with a notable change in action looking at megacaps that drove the rebound bus yet again. NBSP the rebound rally continues to suggest that investors remain confident about the economic prospects where a virus vaccine still provides a pillar of support, albeit with some dents in the armor. But, ultimately, they remain codified around the Federal Reserve Board's redoubtable policy support. NBSP for good measure on oil. NBSP according to sources, the API inventory data was a bit of a wash after NBSP. The American Petroleum Institute reported late on Wednesday that U.S. crude supplies rose by 3 million barrels for the week ended September 4. The API data, which was released a day later than usual because of Monday's Labor Day holiday, also reportedly showed gasoline stockpiles dropped 6.9 million barrels. In comparison, distillate inventories rose by 2.3 million barrels. Currency markets: all about the ECB. Traders have hit the pause button, given the enormity of the ECB meeting later today. NBSP in Bloomberg's ECB story, the headline "More confidence" seems to contradict the substance, only slight changes to the outlook. The direction will surely be right, i.e. the ECB will sound relatively optimistic on Thursday and ECB President Lagarde will not say much on the euro. NBSP indeed, this means Eurist will likely be stronger after the meeting, especially if Lagarde doesn't spend much time talking about it. It should make for one of the most interesting post-EDB decision media scrums in some time, with traders bringing out their stopwatches to determine the next Eurist pivot. I am not sure much has changed in terms of the bigger picture, and Eurist is still heading much higher. NBSP: the market has been busy reducing positioning ever since the failure of 1.20 and had been hoping to buy a dip at 1.17-1.15. Looking at EBS volumes, traders didn't jump on the 1.1760 yesterday. So there remains a heightened risk of traders tripping over one another for topside exposure once the ECB risk is out of the way. NBSP: the break-even for Thursday is around 55.5 BP, which is about average for the event, but some topside asymmetry is building. NBSP: the ringgit local traders will likely hit the pause button ahead of the BNM rates decision, which is very typical. But with global risk faring much better and oil prices getting gingerly supported by the uptick on stock markets overnight, the MIR could trade on a more favorable tone. NBSP: but with the FTSE Russell announcement on whether MGS ringgit-denominated bonds will remain in the World Government Bond Index WGBI looming ominously on the near horizon September 24, it might not all be a bed of roses for the ringgit between now and then. NBSP: the yuan. NBSP: although the more stout US dollar has triggered a wave of profit-taking this week in Asia FX, compounded by the latest Trumpian China bombast, traders were hardly providing long US dollar after the yuan put in a resounding rally overnight as traders position long CNH into a potential Chinese CGB's inclusion in WGBI and still widening yield differentials CGBs versus USDs. Gold NBSP markets. If there was any doubt that there is a strong rally hand at $1,910, the latest price action should put those concerns to rest. Indeed, give gold credit for holding up in the face of adversity even if it did take some backtracking news on the vaccine front to push the market higher. Gold is holding up admirably considering the rise in back-end US yields and the latest US dollar bounce. NBSP. I'm by no means a bear, but I'm also not thinking $2,000 anytime soon as price action is telling me that, for all the noise made around Fed Chair Powell's Jackson Hole speech, the market is questioning the Fed's ability to generate inflation rather than its resolve to hold rates down. Sure, gold will be supported by what is known lower for longer along with the overwhelming expectations for a weaker dollar, but the key question remains for me: what is going to get us to my $2,300 $2,500 year-end target? NBSP. I like gold because the FOMC's new policy roadmap, unveiled in August, solidified expectations that rates will stay low for a long time. But the market remains very unsure just how much of the new framework will find its way into FOMC's 1516. That makes the September post-meeting statement a critical question. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.